There's a risk that the current Amazon is going to be converted to a savanna, and that will not only impact this part of the world, but it will have a huge implication on the climate globally. Um, so this is a clear example that we are looking at a market failure, right? So it's clearly more economically viable to convert a forest than to keep it standing. So if we want to fix the market with public sector interventions, with incentives for the private sector, we need to understand how much it actually costs to restore and protect the forest. So hence the Forest Finance Gap Study, which we have undertaken in the Indonesia and the Amazon part of Brazil. Yeah. Next slide. So in this study, we look at two flows. We look at forest positive flows, which is the financial flows to activities that help protect and restore forest. And we look at forest negative flows, which are the flows of finance that are going to economic activities that are converting forest due to agricultural, mining, and infrastructure developments. So in this slide, you see that on the Brazilian side, the negative flows are 8 times higher than the positive flows. And on the Indonesian side, this number is 14. So 14 times more negative flows than positive flows. Next slide. And this slide really shows how it's broken down. So if you look at the Brazilian side, you see that the negative flows is mainly consisting of loans and subsidies going to Brazilian crop, agriculture and cattle farming. On the Indonesian side, the loans are more going to palm oil and pulp and paper companies. What's interesting to see is that on the Brazilian side, the domestic budget is on the positive flows is bigger than overseas development aid, ODA. But it's dwarfed by the subsidies that Brazil is providing, harmful subsidies that Brazil is providing to the agricultural sector. On the positive side, 36% of the positive flows in Brazil are currently consisting of private sector financial flows, right? So there's a big footprint on the private sector side of Brazil. On the Indonesian side, I already mentioned the loans, but then when you look at ODA and the budget on the positive side, on the budget of domestic budget, is about the same size, right? So it's not, it's at par. So let's go to the next slide. So this is the gaps, right? So and what is clear that the gaps on the Brazilian side is about 12 billion, and on the Indonesian side it's about 5 billion. And currently we're only looking at a 5% positive flow that is filling the gap. So only 5% of what is needed is currently covered. So when you think, okay, what is needed on the Brazilian side, you think about initiatives like Planavec, PPCDAM, the Forest Code, and the National Bioeconomy Development Plan. And on the Indonesian side, it's the second version of the NDCs, but also on the FOLAU NetSync. Next slide. But the good news is the gap can be closed as long as we're ambitious. And what you see here on the red is how we can redirect the negative flows to positive flows. So that's the red part. And on the positive side, on the yellow-green side, is how we can scale the existing positive flows in order to fill the gap. So if you look at the Brazilian side, how we want to scale agricultural loans that are actually DCF aligned, so that are not creating deforestation but leave the forest standing. It's more disclosure by Brazilian bank on how they are actually exposed to deforestation using frameworks such as TNFD. But also the Brazilian Central Bank needs to regulate better on deforestation in portfolios of banks in Brazil. But also there's great initiatives such as the TFFF, RED Plus, and these initiatives can be scaled, right? So we really need to make sure that TFFF reaches the 125 billion target and is starting to generate substantial flows to the Brazilian forest. Um, but also subsidies. There's a lot of really positive programs, such as the National Program for Strengthening Family Culture in Brazil, that needs more subsidies. So why doesn't the Brazilian government think about repurposing some of the existing subsidies to these types of programs? Next slide. So on the Indonesian side, on the bank loans, it's pretty much the same story, right? So Indonesian banks need to understand how they're exposed to deforestation risk related to oil palm and infrastructure development, using TNFD as a disclosure framework, and set targets how to end deforestation in their portfolios. But the Indonesian financial regulator has a regulation called 51/2017, and that needs to be updated to exclude deforestation in the lending of Indonesian banks. And the same supervisor has developed a green taxonomy on what is actually green lending in the Indonesian market. So there are already standards within Indonesia which allows banks to label some of the loans they have in their portfolios as deforestation-free lending. This is the last slide. So in a nutshell, what is needed? We really need to think how we can use the capital markets in Indonesia and Brazil and really think how they can engage with the clients to get involved in DCF agriculture and DCF-free activities. Then there's quite a substantive amount of subsidies in both countries, and there are already existing programs ongoing that really needs replenishment from these subsidies. Both Brazil and Indonesia need to increase domestic budget that help and contribute to protecting and restoring forestation. We have donors in the room. We know that ODA is going down, but ODA needs to support countries like Brazil and Indonesia in this ambition. But then also let's be smart about how we deploy that ODA money and how it can also help to develop new financial instruments such as TFFF. So we need catalytic finance from the ODA community to help mobilize private finance. But of course, keep in mind that the IPLCs, the indigenous people and local communities, need to have direct access to forest finance and that capital is equitably shared. But of course, finance is not enough, right? So we also need to work together on a different financial system that thinks about the long term and also values nature and human well-being in the way financial decisions are being made. The last thing is I want to acknowledge Conservation Strategy Fund sitting here. They are the co-authors with WWF on this very insightful report. If you have detailed questions on the numbers and the methodologies, please go and find these two people here. If you want to download the full report, scan the QR code here, and with that, that's kind of the intro of this panel session. So can I invite the panelists to the stage? Yeah. Great timing. Hi, I'm Aaron. Nice to meet you. So, we have the panel is complete. Thanks for running, Andre. So let me introduce the panel to you. We have Andre Aquino. He's the Special Advisor on Economy and Environment for the Brazil Ministry of Environment and Climate. Next to Andre, we have Maggie Charnley, Head of International Forest Unit of the UK government. Then next to Maggie, we have Dewi Rizky. She's the Chief Conservation Officer of WWF Indonesia. And then next to Dewi, we have Julio Carepa. He's the Head of Social, Environmental and Climate Risk at Bradesco, a Brazilian bank. Welcome. Let's make it a fun panel because it's the end of the day, so we need to keep these people a little bit, entertain them, right? So Julio, do you need to finish your snack or can I start with you? Okay, let me start with, it's not the order on my sheet, but that's good. No, it's good. Maggie, I want to talk to you, well, I just mentioned ODA is shrinking, so we need to be smart, right? How we deploy ODA, and you have access to some of the ODA in the UK government, hopefully. So how can we use it in the smarter ways to catalyze additional finance? For example, how can we overcome the blockers to mobilize more private finance, for instance, to the jurisdictional RED type of instruments? Do you have some thoughts on that?
Thank you. Is that working?
Yeah.
Good, super. Thank you, and thank you first to WWF and the Conservation Strategy Fund, because it is so illuminating. We all know that odour is a tiny part of the overall picture. It's a really, really important part, and it's part of our kind of global contract, but it is a small part. So making sure that it works hard is important for two sets of taxpayers as well as the outcomes. Natural resources and private capital are always going to be the two big pieces, and as demonstrated so nicely by the report, the negative, whether it's negative investments or subsidies that are driving harm, massively outweigh currently the positives. So making sure that ODA is used to drive governance shifts so that forests and forest economies are well managed, so that the enforcement is in place, because there is an absolute correlation. The more enforcement, the less deforestation. And our Brazilian colleagues and our Indonesian colleagues are really good examples that if you invest in enforcement of your own regulatory structures, you drive deforestation rates down. So getting the governance right is somewhere that ODA can be really helpful, giving a bit more power to the elbows of forest ministries. It turns out that the all-powerful markets are somewhat wimpy. So one of the other things that ODA needs to do is give markets confidence, the confidence to step in. So public finance plays a really important role in de-risking investments for where commercial companies fear to tread, because it's novel, because it's not well understood, because people think the natural environment is somehow subject to more difficulties than the engineered environment. Getting over all of those hurdles requires public sector blended finance. And all hail to our Brazilian friends, because the Tropical Forest Forever facility is a genuine innovation that uses a tiny amount of ODA and a larger amount of public loans to de-risk private capital at a scale we have never seen before. And so the scales of those ambitions are really quite extraordinary, and we have every confidence that that model will work. And it has been so inspiring to see some of the initial seed funding coming through. The UK has been one of the founders of the LEAF Coalition, which is another area where blended finance works and comes to the J-RED point. So for a long time, companies who were in the carbon markets wanted to be able to point at the woman and the goat that had benefited from the carbon payments. So jurisdictional RED was a much harder sell, because saying, well, across this whole state, forests are better protected, was a much harder thing for companies to be able to explain to their boards. They wanted to be able to point at the beneficiaries. And when they're that diffuse, that's a much harder sell. So one of the things the Leaf Coalition is really designed to do is to give companies the confidence to invest in what is the highest integrity approach to nature-based carbon markets by both providing a jurisdictional RED standard, but also by ensuring that the companies that participate can only do so when they have deep emissions within their own value chains. And then the final thing I would end on is just to say the other thing that ODA really needs to help is improving access to those groups with the quietest voices. So I've just come from a meeting with a group of representatives from indigenous peoples here in the Amazon. I also spoke to a group of women working in grassroots NGOs. But we often channel money through the big UN agencies, through the big international, WWF, but through the big international NGOs, when what's really needed is capacity building amongst grassroots organisations that operate for and amongst the communities who need to benefit and who deliver the greatest ecosystem benefits.
Thanks, Maggie. So, yeah, you said it right. So, in a way, we need to think about ways how we can take away the what do you call it? Wimpy? The cold feet. I'm Dutch, so the cold feet of the private sector. Is that right? So Andre, I was told that you're the kind of the engineer of the Tropical Forest Forever facility. So congratulations again. It's also in this report that we estimated that the TFFF will double the amount of positive finance to Brazilian forests. So that's a great achievement, but it's not enough, bro. Because I just showed the finance gaps. So according to you, what is needed to scale these mechanisms like TFFF and GRED in Brazil? Can you point to some other opportunities such as Eco Invest or CRA?
Yep. So thank you so much, and great to be again here and talking to several of you. We keep, I think we emphasize the needs of finance. We know the gap is huge, and we need an all-of-above approach, right? Meaning, different instruments. We have been conceptualizing this for this COP. The president of the COP has been using this reference a lot of the three activities of forest, right? So conserving, reducing deforestation, and restoration, and different instruments for them. So for conservation, that's the role of the TFFF. That's what the TFFF has been designed for. It's really to pay for standing forests. It's not about reducing deforestation, the TFFF. It's really paying for standing forests, a price per hectare. For reducing deforestation, we have RED+. That very honestly has really been struggling to happen at scale. On Monday, we are going to have an event on forest finance that will allow, it's another attempt of some of us to support RED+, the scaling up of RED+, the JRED coalition, both buyers and suppliers of credit. So we are trying to give confidence to the market because it's being very difficult, right? But we need it. We need it, right? We need that amount of funding that can be raised for RED+. And then restoration. This is a whole new thing, different source of financing, different needs, and very high needs. So UNEP has conducted a study on forest finance needs. By far what needs most money is restoration, right? If we are to achieve the goals of, like Brazil, we have 12 million hectares. Indonesia, it's also 12 million. China, it's amazing. So for that, we will need carbon markets. A big potential for restoration is high integrity carbon markets. Markets have been paying much higher prices for removal credits than for avoided emissions. And just to complete, in addition, so these are the mechanisms. In Brazil, we are doing much more than this. So basically, we have the main source of financing to the land use sector in Brazil is Plano Safra. It's our farm bill. And we have been consistently improving Plano Safra to reduce incentives for harmful activities and increase for good ones. So one thing I'd like to mention is that this year the Minister of Environment has proposed to the Minister of Finance that rural, that farmers, right, that have native vegetation in surplus of what is needed by the forest code, they get lower rates of interest in the Plano Safra, in the farm bill, right? And the other one you mentioned, CRA. This is a very complicated thing, but think of it as biodiversity credits, and it is an instrument that we have in our forest code that had been stuck in a very complicated definitional problem of what a habitat means, basically. And we have been able to solve this. And 2 weeks ago, we issued the first biodiversity credits, the Forest Service, and they were immediately bought by the market. So that's another way of getting money.
All right, thanks, Andre. I'm turning over to Indonesia. Dewi, you're probably the only Indonesian in the room. Am I right? Yeah. So, and we're in the Amazon, and we've talked a lot about the Amazon, but what about the Indonesian situation? Do you recognize the issues, or are they different when it comes to financing for forest?
Yeah, thank you, Aaron. I think Andre is half of Indonesian as well. He speaks Indonesians very well. But yeah, I understand that the studies actually, the data from Indonesia is a bit patchy because there's difficulties to get the data. They have to actually extract the data directly or manually from the PDFs and then cannot get them exact data that needed to actually finalize this study. But anyway, the study has shown that the private finance is key for Indonesia, and then the finance positive is smaller than the finance negative flows. Yeah, so I would like to share about what actually forest financing condition in Indonesia. We have the BPDLH or Indonesia Environmental Fund. It's actually the same like Amazon Fund, but in smaller scale. So it finances the forest restoration, it finances the ecosystem rehabilitation, it finances the peatland restoration, fire prevention, and also the social forestry implementation as well. And then also the climate mitigation for follow netting, the program in Indonesia from government and also biodiversity conservations, and also result-based payment. I think result-based payment is the main things that forest financing could be distributed among the governments, local governments, private sector, and also the communities and NGOs as well. And then the second, as you already mentioned, that historically the public finance is actually supporting the pulp and also palm oil more. And then I think the Indonesian government has actually put the instrument in national level, like the moratoria in the past. Yeah, it's and also peatland restoration finance and permit reforms. It's actually put the direction towards the positive finance flows in Indonesia. And also there is a timber legality assurance system that actually saves the access to support markets. SVLK is the wood legality verification system that actually supporting the FLECTI system, if you remember that the European actually requesting that for Indonesia, yeah? And then also there's the carbon market for the credit integrity. Indonesia actually has built the scheme for domestic carbon trading architecture, yeah, for the IDX carbon and domestic emission, and also if allowed, we could actually trading for internationally, but it depends on the government regulations later. We have already had a new regulations about the carbon trading. And also the fourth is opportunities for forest-based revenue streams. Yeah, they could actually go for carbon credits and also sustainable timber under SPLK and FLECTI, non-timber forest product and ecotourism. And the last is pollen netting. This is the one that actually being conducted and then got funded from Norway government, GCF, and also other donors that being implemented through the Indonesia Environmental Fund for all forestry sectors only. So this is giving the good chance for Indonesian, by national and subnational levels to tap that funding. And then also I think that's all for me.
Okay, thanks,
Thank
thanks,
you.
Dewi. So these are all great examples how you can scale nature positive or forest positive flows. Just I mentioned in my introduction about OJK, the financial supervisor. Do you see them moving towards regulating of forest?
Yes, exactly. OJK just actually released the taxonomy for the sustainable financing and also the roadmap, second roadmap to actually support the sustainable financing as well. So it actually regulates the banks how to actually put the funding towards the green business.
Right. Thanks, David.
Thank you.
Okay, we're going back to the Amazon. We're going to Bradesco, who in a way you represent the private financial flows, Julio. Um, so what I read about Bradesco in the Banking on Biodiversity Collapse report is that you reduced your exposure to deforestation. So also congratulations to you. But I suppose there's still deforestation in your portfolio. So I was wondering, what strategies or safeguards is Bradesco using to transition towards DCF? And have you put targets for yourself?
Well, yes, deforestation is a huge problem in Brazil, and I really welcome this information coming across. And I think COP is a great opportunity for us to get the message across that it's not an easy problem to solve. So that's the first thing that we have to acknowledge, that this public sector is working towards reaching those goals. The private sector is interested in helping bridge the gap towards the solution. But we still have to acknowledge the different interests that are at hand whenever we are talking about this huge problem for the country, not just for public or private sector. So what we have done is we've tried to work as much as we can within the public sector rules and the governance that has been put in place to support the way that we perceive the risk of deforestation in financial instruments. So, for instance, the subsidized rural credit program in Brazil has many safeguards that have to be met. And what we've done is we've improved our technology, the use of public data, the use of information that leads us to better understanding what the conditions are within those properties that we are about to finance. So that helped a lot to screen out all of those that were in any way non-compliant with the conditions that had to be met. What we've done to go beyond that is, so okay, how can we use the knowledge that we've acquired from this to go and use the same mechanism to different types of products that we also have. So for instance, there is this rural note. It's a different type of mechanism, a program that doesn't require the same safeguards, but we have decided to apply the same rules so that we are more stringent than we would be without the same view about this product. So what this means is we have taken what we have learned from a positive view of credit and what we can do as a private sector, and we've applied it to different products that don't necessarily require the same type of safeguards. So we've gone beyond what the bare minimum would be, and by that I think we have screened out some of the deforestation in our portfolio, because we acknowledge the importance of this as a driver of credit and social and environmental and climate risk. Because at the end of the day, when we talk about Brazil, deforestation is a huge source of risk, not only because of the direct impact of deforestation, but also the indirect impact that it will have in other areas and in other economic sectors. So by going beyond what the minimum would be for those safeguards for specific products and applying those rules to different products, we are actually hedging ourselves from the risk that would come from other activities which are also necessary to guarantee our health, our financial health at the end of the day. So we have tried to align those interests as much as we can, also looking at our position within the financial structure and trying to work as best as we can with the public sector.
Thank you. So, in a way, you're saying that the Bradesco is ahead of what the central bank of Brazil is asking you in the context of deforestation.
Well, it depends on the product. For the product that the requirements are in place, where there's no deforestation accepted, where there are many of the property rights and the documents have to be in place, we are compliant with those. But we go beyond, where we apply the same rules for other products that the central bank doesn't necessarily rule in the same way. So we apply those conditions to additional lines of credit than would be required. So, I mean, it's in line with what the central bank requires, but it goes beyond in applying that to additional lines of credit. I think it would be the best way to put it.
All right. Thanks, Julio. Before I'm going to the second round of questions, I want to check, are there any questions from the room now? Go ahead. Is there a mic?
I had a question about the biodiversity
Can you say
offsets.
your name and who you are?
Yes, sorry. My name is Sativa Volbrecht. I'm a representative from the University of Chicago, our Institute for Climate and Sustainable Growth. And I was curious about the biodiversity offsets in the financial gaps, and I was wondering, is that through forest restoration? Is that through subsidies to not deforest? Or sort of what were the goals for those offsets? I was wondering.
Yeah, it's the information in the report. I think it's the positive. They would. Yeah.
Can you answer?
Yeah.
So thank you for the question. Andre have mentioned it. So this is our. Oh yeah. So hi. Thank you for the question. I'm Heitor. I'm one of the authors for the study from Conservation Strategy Fund. So Andre have mentioned it. This specific biodiversity offsets through CRA mechanism is regarding our forest policy. So we have specific environmental protected areas within each of the biomes in Brazil. And this specific instrument is for us to have insurance of the balance between each legal property are filling the minimum requirements for environmental regulation. So when we are creating these types of mechanisms, one property in a specific biome can buy what is the CRA instrument from others to ensure that at the end, all properties have the minimal legal standards for environmental regulation. So that we include the biodiversity offset specifically through this instrument, which means not all biodiversity offsets, but specifically this one that is following our forest policy agenda. Thank you.
Hello.
Yeah.
Can you guys hear? Can you hear me?
Yes.
Yeah. So thank you for the panel. I haven't had a chance to read the report yet. My name is, by the way, is Beto Borges with Forest Trends. Looking into the question of biodiversity offsets, have you looked into other ways of valuing biodiversity without the offsetting mechanism to generate value, or is it just based on offsets, as compared to the challenges that offsets has in the carbon market, for instance? Have you looked into other ways to value biodiversity without the offsetting mechanism?
Do you mean something like? Oh. Do you mean something like applying value to biodiversity in an independent fashion, so that it can be commercialized as were carbon credits? Is it something like that? I'm not sure I understood the question, which I also think would be best for the applied for the writers of the report.
I think this is about the government policy, right? So, CRA is an attempt to value biodiversity, but not measuring biodiversity. It's actually very similar to the TFFF idea. It's a hectare base. One CRA, one. We say quota in Portuguese, but it's wrong in English. Unit, one unit, one unit. Good. Friday afternoon. After something that feels like 2 weeks or 3 weeks already. 1 unit is 1 hectare of native vegetation conserved or under restoration. This is interesting, under restoration too. And what exactly is under restoration, we are still going to define. So far, we only have done this once, 2 weeks ago. Only one was issued for the state of Rio and this is also very interesting, in a RPPN, in a privately protected area. This is a very Brazilian thing. We have this system that people can voluntarily put their private land on perpetual conservation. It's like in English, like in the United States, they call it like conservancies, I think, something like that. So this was the first one. It's a proxy for biodiversity. It's not super important. It's not offsets. The CRA can be used either as offsets for people that have the deficit in their native vegetation that lack, or it's just an environmental asset. And the people that bought the asset this time was actually BV Rio, and they are not doing it for offset.
Okay, I hope that clarifies, and otherwise go to the authors and you can have a deep dive on the technology and the methodology. More questions, or shall I move on? Okay, let's move on. Maggie, I want to turn to you. UK government, I want to talk a little bit about the role of the multilateral development banks. And I just came from a session on tracking nature positive finance. I don't know if you're aware of that. You're a donor and you're a shareholder of many multilateral development banks. So how do you see their role in contributing to bridging the finance gap for forest?
Thank you. Sounds very strange when you're speaking to yourself. Anyway, money buys influence, right? You said we're a shareholder, that's quite right. And we are also a high capacity country with a huge staff. And one of the things, I've come quite late to development finance. I've only been working in it for the last 5-6 years. But one of the things I've been really astonished by is just how much easier it is for the UK to get access to a development bank than it is for the beneficiaries. So one of the things that I think we need to be much better at is working in partnership with the countries that are, and in the end, it's mostly loans. So there isn't a kind of good heart, well, there is a good, I was going to say there's no good-hearted nature to this. It is concessional finance, but it is country governments choosing to add to their debt burden. And that's a big decision. So when banks loan money, making sure that they are working for the countries that benefit from those loans is really, really important. And what we're hearing more and more is the need for the banks to be supporting countries in identifying routes to development that protect the natural assets that sit within that country. So ensuring access to expertise around things like natural capital accounting, so that when a country makes the decision to stop exploiting its oil resources or its mineral resources, that doesn't end up in a escalation in the interest rate or the risk that country is seen to be pursuing, but that instead protecting natural assets is reflected in a lower interest rate, as it's understood to be reducing the risks to that country, including very real risks from climate change. So there's something around how multilateral development banks support countries in building in the consideration of the importance of nature into the very basis of which we make economic decisions, and how that's then reflected into the way we value investments, I guess. I think really important that there are some banks that are really leading the way in very particular areas. I think IDB in this region has done a lot of work to support, including around direct finance, some things around debt for nature swaps. The Asian Development Bank is looking at how you support flyways and swimways. But those banks need to be doing that, not in isolation, but as part of a wider conversation across the whole community of development banks. So ensuring the banks that are doing best in class in terms of innovation are helping to create norms around that. And I also think there's something about really ensuring that the MDBs have the expertise in-house to be helping and supporting countries when they're making those decisions. So, for example, on the forest agenda, it is hard, unless you understand the forest sector, it feels very high risk. Anything we don't understand, we price in as being risky and more expensive. So ensuring MDBs have the expertise in-house to properly price in how those sectors are managed is really critically important.
All right, that's good. Julio, you wanted to respond. Do you work with development banks?
Yes, I actually wanted to add just very quickly. First, to acknowledge also BNDES's work on this, because they have done an amazing work. We partner with them quite frequently. We have to acknowledge that they've done a great job.
Tell me more.
Well, they're the biggest development bank in Brazil, yes. And the way that they approach environmental and climate topics are very serious, and well, they're very dedicated to constructing sophisticated mechanisms and evaluation and assessments in a way that they're always on trying to figure out what the best way is to yield the intention, which is the best results, that of course take into account the right equilibrium between financial security, like you said. At the end of the day, it's a bank, but also of the public interest being a development bank in itself. So, and I think something that I wanted to add on, one of the things that we have to also recognize is the evolution of the setting that we are under, the evolution of technology, of the databases that are available now, which is something that I don't think I stressed enough, how important it is for us to use the more of the information that is made available just recently, and that makes it easy to control something that you are aware of, which is, I think, in the past, the way that we did things very manually, having to look at a lot of information with limited teams and all of that, that didn't help. Now that we can look at information quicker, and we have tools, we have mechanisms that get us the information better and faster, that's where we can act, and we can, try to block operations and try to speak with clients and to understand what's going on, which I think is a crucial part of what's been going on as well, as far as trying to reach our goals.
Right. Julio, I'm sticking with you because I wanted to talk about incentives. So incentives for you as a bank, but also incentives for your clients. So do corporations like with the BNDES help to provide these incentives, or do you have other examples of incentives to redirect negative flows?
Yes, that's a very important part. It's a huge aspect of trying to get private interest, private intent regarding this topic is about, at the end of the day, does the math work out? Does the equation balance itself out in terms of creating enough positive returns so that we can be incentivized to work on this? Because at the end of the day, it's private institutions try to yield profits. They are profit-driven organizations as well. So having instruments that both try to de-risk operations, which is a huge aspect of trying to get the money across, because if it's hard to quantify, if there's a lot of risk involved, then of course hedging is going to happen, and the costs are going to be very big as well. So de-risking, trying to reduce this cost, and also funding subsidized resources that not only the public sector has to act on it, but also the private actors can also contribute but in a way that the blended finance mechanisms, I think, are a great example of working around. That's where we can create the right appetite within the market and try to get those players on board as well. Because at the end of the day, it's the companies that have to find the incentives and to drive the actions. The institutions are the ones that are providing the credit, but they are not deciding what is going to be done with the credit. What we can do is try to influence as best as we can, but at the end of the day, we have to create also the right incentives for the multiple players involved. And I think we always get to this discussion whether it's making the operations that the negative financing more expensive, or is it to create a positive incentive for the right for the positive financing. So I think we're not gonna solve this debate today, and I think it's gonna take a very long time for us to get anywhere on this. But we have to get like everyone moving in the same direction, and I think this partnership is a great way to go about it.
Fantastic. Okay, let's move from incentives to opportunities. Dewi, back to Indonesia. Can you give some examples that you're seeing or that you even initiating in Indonesia on forest finance, and which also could provide opportunities to public and private lenders, companies?
Yes, thanks, Aaron. I think what WWF Indonesia has done, actually working with the banks and financial institutions to actually trying to greening the financing to be able to finance the green. So we actually also set up the course for Scope 1, Scope 2, and Scope 3 for banks. Also for our from the study as well, it's saying that redirecting this financial institution towards the positive flows will actually generate 1.5 billion itself. So this is the chance for us in Indonesia to work on that. But the second is about how blended finance, as Julio talking. We are currently actually proposing to the government for a Reconnect Borneo initiative that is actually putting all the corridors for wildlife throughout the Borneo Islands, including Malaysia. So we're talking about the 14 million hectares building up maintenance and also building the new corridors for wildlife. So this blended financing could actually be in this initiative. We supported the government to improve the size of domestic or public fundings through the donors or ODA, and then put it as the corridors works for forests in Indonesia, and as well as the social forestry that could actually be put as one of the alternative to support the corridor works. And also other biodiversity credits could actually become the interest of the private and then government to actually work towards that. And then the other thing is the fiscal incentive, how the government could actually put towards the private sectors already been conserve the habitat and then the corridors around or within their working areas.
All right.
Thank you.
Thanks, Dewi. We're getting to the end of this session, and it was a very rich discussion. And my brains at the end of Friday are not big enough to summarize it. So I'm going to do it the easy way. I'm going to ask you as the government of Brazil and you as the government of UK, what could your organization, what is the most strategic action that you can take to address the forest finance gap?
Convince these guys here to invest in the TFF. I could not lose this opportunity. I mean, this one. Well, look, I mean, for Brazil, I think we are doing everything we can. I think one thing that is becoming very important now in the in the negotiations is the roadmap to halt and reverse deforestation. So I think next week I have the feeling that we'll be focused on that.
You know,
I'll take that. We'll take it away and have a think about it, Andre. I do genuinely think, for me, I think you're right. TFFF is the innovation, not just for forests, but because it shifts the debate. We have talked for years about finance flows to pay for avoided loss, to pay for additional. What we've never ever managed to nail is a flow of predictable, steady finance that pays to keep something standing. And TFFF is exactly designed to do that. It takes away some of the complexity. It takes away the kind of trying to work out exactly how many tons of carbon or exactly how many flowers or bees, and it takes a fairly straightforward metric and just says, actually all the evidence shows that ecosystems are best when they are old and primary and looked after, and it helps a flow of finance that doesn't rely on big pots of public money, but relies on the investment flows that we would get from returns from the market. And so I'm going to agree with you.
So that's the action you will take?
I can't promise anything.
All right, okay.
But I am going to promise that we will help get this to scale and we will support it.
Thank you.
Every feasible
Thank
way.
you. There we.
Thank you. I forget to mention about TFFF. Indonesia is a big believer of TFFF because it could actually really shifting the finance flow toward the positive way. But tropical forest needs our action now. No government could do loan, no investor could do loan, and no community could do loan. We need to act together.
All right.
Thank you.
I think that's all. Everything that was mentioned it's very important. It's critical, and I think to add on it would be to think about restoration. How can we create financial incentives? How can we create products that go beyond the challenges that we have faced, for instance, on trying to monetize forest growth by carbon credits? There are huge problems involved in this. In my current position, I don't really work on this, but in the past, I used to be a consultant, and we did a lot of work on carbon credits. And the standards on itself have created some challenges. So we have to think of instruments and mechanisms to go beyond and try to get the funding, because it's expensive. And if we don't create the right financial interest, we know that there's not going to be an appetite for the private market. And we have to try to come up with ways, and investors at the end of the day willing to pay for something that we need. So not only preserving, like you've mentioned, not only restoring, like Andrea mentioned, but we also have to restore, which was in his speech as well. I think is something that we have to think of.
Right. Thanks, Julio. All right, with that, I would like to thank the panel for your great remarks and observations. Thanks to your great questions. Download the report, scan the QR code, and have a good day.